Good morning, everybody. Welcome to the Flow Show. Sorry, I'm just in the middle of trading at the moment, so you have to bear with me. Morning, Kay. Morning, Stel.
PGIF.
MFs.
How are we doing?
TGIF, MFs. No, I'm kidding. I'm good. How are you guys?
Yeah, right. Holding up. Coffee. The coffee levels are doing their job for now.
Wow. Yeah.
Good. Were you up for the BOJ?
Yeah.
No, poor you.
Yeah. Oh, that's good fun actually. I would like to say I miss it, getting up for those sort of things, but I don't. No, it's been a bit of fun this morning in the room on Twitter. So all good company from the guys and girls. So yeah, it's sometimes you got to be up for these events. You know, they're big enough that something can happen, and something certainly did. So obviously that's going to be the main basis for what we're going to talk about. So we'll have a little run through everything else first. Let's get the old screen share going.
Let's have a look here. We can't see your screen yet. There we go.
Oh, good.
Excellent.
Right. So we shall crack into it. The BOJ will probably leave till last, just because it's going to be obviously the big subject we're going to talk about. So going to crack on to the data, and I'll leave the Aussie data. I'll leave the Japanese data too until we get to that part as well. A bit of PPI data out of Australia. Numbers coming off a bit. Coming off year on year, but on the quarter up a little bit as well on these quarterly numbers. Coming into Europe and GDP data, inflation data, everything's dropping this morning. So GDP in France coming in as expected on the quarter, bit of improvement year on year, but close to the flat line number 0, so nothing gangbusters there as well. CPI in France looking a bit stickier. CPI 5.9%, 2 pips higher than expected. HICP 3 pips higher than expected, both higher on last month. So there we go with the sticky inflation again. Spain, which saw a big drop last month, has gone up again, not as much as expected on the CPI, 4.1 versus 4.4 expected, but again, nearly 100 pips higher than the 3.3% prior, which I think was down from something like 6% in the month before that. So a lot of volatility in these inflation numbers there. On the HICP number as well, not as high as expected, but still again over last month. GDP in the mix, 0.5% for the quarter in Spain, so beating expectations, everything's tickety-boo there. Germany, unemployment change a bit higher than expected, though the unemployment rate stayed as is, but there was disappointment from the GDP numbers there. You'll remember earlier this week we reported the note from the Bundesbank saying that it looks like GDP will be positive in the first quarter. They can't even get their own forecast right because it came in down 0.1%. Italy doing well on the GDP front as well, 0.5 on the quarter, 1.8 year on year. Regional CPIs from Germany as well, some soft, some holding. The overriding theme is still sticky from all that. So even though some of these numbers have been dipping a bit on the year on year, it's still gains. So these are still numbers that are up over last year, positive numbers there. Eurozone, pan-Eurozone GDP, little miss on what was expected on both counts, and pretty much the story that we've known recently, that the economies are, you know, they're either going to go really good or really bad. They're just going to sort of bubble along, maybe up a bit, down a bit, up a bit, down a bit. And looks like Stell's trip away the other day has yielded, or back in February, has yielded dividends because their retail sales were up 2.4%. Glad Stell, you've been out spending again. Is that a new surfboard for the summer?
No, I have enough, man.
So yeah, so overall data, inflation still sticky, growth okay, nothing special, nothing bad, and yeah, onwards we go on that front. For the UK, Goldman Sachs upped its forecast for the peak of Bank of England rates to 5%, joining a couple of other banks and rising expectations that the bank will need to take the rate higher. As you know, that's been my expectation, 5%, my magic number, for many a month now. I'm just getting worried that all the banks are getting there as well, because that's never good news, given their record on forecasting. So I might have to revise my bank rate down to 3% or something and go completely the other way. But that's what Goldman Sachs are forecasting anyway. Just nipping back into yesterday, looking at the US data, GDP out from their missed expectations, coming in at 1.1% versus 2% expected, although the underlying components didn't look too bad. Sales beating expectation, 3.4% on that one, and also in the consumption numbers coming in good at 3.7%, a little bit of a miss on the 4% expected, but still a decent number there. These PC prices pretty much confirming what we've already seen in the prior data for Jan and Feb. Obviously, we get the March numbers today, which will complete that, because they will be estimating what those numbers are, though I always think that one has to think they know these numbers, and so they're in these numbers already. So the PC numbers today, which are for March, probably already in these numbers anyway. So it remains to be seen whether it's going to be a market move of the PCE later today. Pending home sales looked a bit soggy yesterday, down 5.2%. So again, a sector, some numbers good, some numbers bad, some numbers in the middle. No real trends developing there. The White House says it's continuing to monitor the situation at First Republic. Deposits in regional banks have stabilized and tools can be used again if needed. However, banks were hitting the emergency loans from the Fed. They rose to 155.2 billion from 143.9 billion in the previous week. This number had been dropping. It started off initially at around 344-45 billion. So it has been coming steadily lower, but there's been a little bit of a tick up in the last week on the Fed programs that they've got going in there, the discount window loans and the bank term funding loans. So that's probably reflecting some of the worries that we've been seeing this week to do with what's going on in First Republic. Reuters pinged out a sources piece right in the middle of the Bank of Japan stuff going on, saying that US officials are coordinating rescue talks for First Republic Bank. That might get a bit of attention when the US comes to the table. Right, so good old BOJ. We finally got there. And what happened? Okay, well, they left rates unchanged, no change to YCC. That was all expected. The key points were from this one that they removed the text saying that they were going to keep rates at current or low levels. They also upped their inflation forecasts, not by a lot, but it's still potentially significant. So 2023 here. So they've gone from 1.6 to 1.8 range to 1.7 to 2% range for CPI, less fresh food. For the core number, they've gone up again, 2.5, 2.7 from 1.7, 1.9. Pretty much the same in all the measures here. So they have hiked up their inflation numbers. May not look a huge deal, but it's a big deal in my opinion, because a lot of expectations were expecting those to come in some round about these numbers, but some are expecting maybe a little bit lower. The fiscal 2025 pretty much on what we heard before, that they were going to go up maybe to at or below 2% on the top end. So a little bit of an uplift there in that. Just before that, we did get the CPI data from Tokyo, which kept CPI ticking over in the pipe. Core CPI beating expectations 3.5%. The other CPI 3.5% beating expectations on the month, up higher. So, and this is the first data for April. Last week we got the March headlines. So it is keeping inflation in the pipe. So for me, that's the three key things to take from this day regarding what's going on in Japan. They've removed language on keeping rates at current or low levels. Inflation forecasts are up and inflation data is up. Now, the rest of it was pretty much Ueda just really talking off the same old script, expecting CPI to slow below 2% in the latter half of the financial year 2023. BOJ saying that inflation pace has slowed due to government subsidies. They're also going to review the last, I think it's 25 years of monetary policy over the next 12 to 18 months. So they're not in a rush to do that. Ueda also said it's appropriate to continue monetary easing. Said they saw a bigger risk from premature tightening. We'll respond flexibly while seeking the price goal, and want to emphasize that the policy stance is to continue easing. Current inflation is high and could last for a few months, but they're not sure how inflation will pick up after it weakens. That to me is a worrying comment, because the whole basis of their easy policy is to get inflation picking up sustainably. So if they've got inflation now, which they reckon is not going to last, and they don't know how inflation is going to pick up after that, it makes you question why they're doing this policy in the first place, and indeed, is it working at all? Now, there were multiple board members that said they were seeing a certain possibility of inflation achieving the 2% target. So maybe there's some who are a bit more positive or a bit more bullish on inflation than others. That's my overall take from the Bank of Japan. The market has said this was dovish, flatly, no questions asked. I think it's pretty much ignored the hawkish points within that. We're currently seeing dollar yen breaking 136. Pretty much went as we expected. That it would have been a big surprise if there had been some hawkish comments in there. I personally thought there might have been a little bit more towards heading the right way in inflation, but no, they kept it very low key. So it's no surprise to see dollar yen rising here, yen pairs in general rising here. And I suspect we're going to see dollar yen bid for quite a while, maybe at least until the data in the US. And then depending on what happens there, we either get continuation or the pendulum swings once again and we head back lower. Keeping an eye on yields is going to be key for this one, because US yields at the moment are still looking a bit softer, but dollar yen's going the other way, and that's pretty much purely because of what's going on or has been going on in Japanese yields. Okay, let's get your views, mate.
Yeah, well, I think so. First of all, I'm going to take a little bit of credit because my base case was relatively spot on, meaning that they would leave everything unchanged and perhaps giving us a little bit of insight about how they see things developing, and that's roughly what happened. I must say there was they went from willing to revise the monetary policy to not the monetary policy, the framework, to taking away references to easing, and then over the press conference, Ueda threw it back into it. So that part to me is dovish. For the rest, the expectations on the core inflation are what the rumors were, around the 1.8 mark for this year. So I think those rumors were relatively correct. And I think also the market was just hoping for them to do something, and the market hasn't got it. So The thing is now that to me it's dovish in the sense that he's buying himself a month and a half to more reflection on what is possible to do. I remain convinced for now that we are going to see some form of normalization. That's not been put into question, but it's a push back. It's kicking the can a bit further down the road, right? For the change of monetary policy. I don't think it changes anything to do the policy framework review. They can still start to normalize while doing the review. That should be okay. But his reference to saying that the policy was correct and they need to continue with it for now is going to keep the market on its toes, I reckon. And the issue with fighting this particular move now, is we're going to need something really weak out of either the dollar side or other economies to counter this move, because as long as ECB or FOMC or other central banks are not going to start to cut, funding on long yen positions will bite relatively soon. If you take into account, assuming that they don't do anything intermeeting, which would be very, very surprising, looking at his over communication before, looking at the statement and his press conference now, it would be really a bombshell if they would do something in between meetings. But that means that a month and a half from now, that means that you're going to pay close to a big figure funding in dollar yen, for instance, if one is short dollar yen. And I don't think that accounts are going to, I'm not talking about retail, I'm not talking about us, we are 5% of the market, I'm talking about the big boys. I'm not sure whether they they are willing to pay away 1% just for waiting, or less than 1%, 100 points, just for waiting on something to happen. Now, against that, and you rightly pointed it out, the CPI in Tokyo was higher. Tokyo is about roughly, right? Don't quote me on the exact percentage. Is about 25% of the Japanese market. So this number is still going higher. That perhaps, if it gets confirmed in the Japan-wide numbers later, that perhaps will give them some food to start to do or think about something more precise. So that about my idea. I think it was really a pretty dovish meeting. This one. I reckon it was not a huge surprise, but it's clearly tilted to the dovish side for me. So it makes it hard for me to go and buy yen in this context, unless the rest of the world is really starting to feel more pain. So that's my view on this.
Yeah, I agree, mate. I mean, I am surprised with that pulling of the keeping rates low line. I mean, that's like the Fed putting, you know, a line from there saying that they're going to keep hiking or something like that. And
I don't know. It is a fact that when, and I don't recall exactly when, May, June 2021, when the Fed sent its first message into the market about thinking about changing something, or the dollar reacted more than that. The problem is that taking this line out doesn't mean that they are going to raise, but it probably means that they are not going to ease more. But then, that was a statement. But then in the press conference, he kept the door open. So he went from a little bit from one side to the other again. So that I think is a line that the market that didn't escape the market, and that's where we had the second wind, right? And I also wanted to add that I reckon that we now are going to get these kind of moves more style Fed or style ECB, that you're going to have the statement coming out, and then the press conference will be as if not more important. I think that is a bit of a shift that we are going to have. We come out of a Kuroda period where you had the statement and Kuroda was uber dovish, right?
Yeah.
And there was no surprises. Now, perhaps we are going to have his own take on the events more than what we get out of the statement. So I reckon going forward, we are going to have to take into account both facts, the statement on the one hand and the press conference on the other. That was just one thing that I wanted to add.
Yeah, no, thanks, mate. And they have built, he has built himself a bit of time because the next meeting isn't until June. So, you know, he's built himself a few weeks in there just to see what goes on. And if need be, assess what the economy is doing, what inflation's doing. But yeah, I don't think anyone could say we haven't prepped this for long enough over the past few weeks. We've been looking at this long enough. I think it pretty much went as expected. The price action, big moves, obviously, big move today. But unless we start banging out some of these ranges, let's put it on this wider chart a bit clearer. Unless we start banging out of this range, I don't see any reason why we would. And I'll be keeping an eye on that 138 area either way, because as much as they've not been hawkish, I still see evidence growing for a need to head towards the exit door rather than away from it. Stel, got any thoughts on this one, just on giving it fresh eyes?
Well, one thing I wanted to mention is that the market has been saying for quite a while, or there has been chatter and analysis saying, look, the BOJ have to switch at some point. Inflation's rising, and there has to be some kind of pivot there as well. I think the market maybe was getting a bit eager and expecting something a little bit more hawkish. I think Kay's view on this, and he said this obviously before the BOJ, his assessment was spot on. Nothing really changed. It was a dovish meeting, but there were, like you said, some hawkish aspects that the markets are kind of ignoring. So overall, I think it was a bit of a disappointment with the move that we're seeing. A big part of that was disappointment because the market was kind of hoping for a little switch, or at least an indication of a switch coming. So anyway, I'm not a specialist on Japan, so I don't have much more to say, but that was just my feeling.
I agree with Stelios and the expectations as well, and we've seen that a bit everywhere, and not only in our room, but even the bank expectations saying that the Bank of Japan is about to normalize, and we expect all of them. And no later than yesterday, Barclays came out with a piece that they expect the dollar yen to trade down to 123. So people keep a little bit of long yen positions, or short dollar yen, or short those weaker crosses like the Aussie yen or the Canada yen over the past weeks, and you keep it in position, and then over this Bank of Japan you get out of it. And also there was a lot to do about the Japanese whales, that if the Bank of Japan start to change, that they are going to have to change their investment portfolios. So people were like, hoping or thinking that if there is anything concrete coming out of there, those guys will have to enter the market. But this meeting really kept those Japanese whales very quiet, I think, and that's the reaction that we have now after the fact. Okay, and let's not forget that over the past year and a half, the yen has been volatile, and so we are about two big figures away. Let's give or take that we're trading 134. It's not unusual to see that in the yen over the past year and a half. So in that sense, even if it's a big move, I'd still say we are in the normal range of possible moves and variations post this this Bank of Japan meeting, if we look at the yen volatility that we had.
Yeah, no, I agree with that as well. And funnily enough, and for the guys and girls who are on our chat room, the vols for dollar yen have actually come under 10%. I think, I'm not sure what they were yesterday, but they were pretty we've been running above 10% for a while, and after all the BOJ, they've actually come under. And as you can see from that screen, we've got this vol widget now plugged into our dashboard on the ForexAnalytix platform. So if you're a member of the room, you can come in and you can see those vols now at the click of a button. So make use of that for keeping an eye. It's the 1 month vols I keep an eye on, just to give a general idea of how things might play out in the price action. So you can do that now, guys and girls. Right, so on to the rest of it, and looking at the prices. For me, I'm still keeping my shorts. I'm happy to be in my shorts. When I trade for the long term, I don't get too much caught up in the short-term moves, and many a time I've had to ride a position offside. That all falls part of my planning. As I say, 138 is going to be an assessment level, and until then, I'll be happy to short it up to that area. I'm going to be choosy about my entries. I'm not going to go every 50 pips or something like that. I'll see where we go, what we do, and play it by ear. I'm still keeping the position fairly small, as I've mentioned before, because of this very outcome, that the Bank of Japan doesn't give anything for the hawks. So yeah, we could have a move up to that 138. Could be aided by the US data, could just be on the Bank of Japan side. But I'm sure there's going to be lots of different moves to come. But for now, I'm happy to sit in shorts and see where it goes from here. As for some of the others, playing a bit of a bit part in all the rest of it. Dollar is up a bit. Mainly what's going on, I don't know, it's really a bit mixed. You know, we've had obviously the yen cross is all rising, but they're not putting a drag on the majors like we've seen recently. You know, we've got euro yen breaking out, looking for that 150 handle at the moment. Aussie yen not breaking out, but looking a bit bid, but even that one looks a bit laggard. And you know, Kay mentioned this one yesterday, that that might be one to look at as a post BOJ trade, and it looks like it's lagging behind some of the other yen pairs because of the weight that's on the Aussie dollar generally at the moment. So it's not a clean picture around the grounds at the moment, but the dollar by and large is looking a bit stronger. As you can see there, Aussie dollar just having a new low, breaking through the recent lows down here. The yield space again is looking a bit wobbly. US yields in the twos, we had that dip, then we had the bounce, now it's coming off a bit. 10's doing pretty much the same. So dollar yen isn't following what US yields are doing, but then if you look at something like the JGBs, where they've had a half decent move down for them, and that's going to be the driver for now for what's going on in yen. So what are you guys making of it overall? Is this just all the vortex from the Bank of Japan for the moment? We're still in month end, obviously, last day to get stuff done. And we've got big upcoming data. So what are your general thoughts on the markets today?
I actually think that the BOJ is only a small part of what, only a small driver for what the market's doing today. I mean, everybody again today is talking about First Republic Bank and, are the problems back, and, is the banking crisis back and all that. So I think the BOJ is obviously a factor, but, what are we seeing? We're seeing lower yields and lower stocks. And that usually means, a little bit of panic. So I think that's what's driving the market. And yesterday's move in risk was so strong, and it brought the S&P back above that 4110, 4115 level. So, could this have been a false breakdown? Maybe. I'll tell you what, if I was short equities, I'd be really scared here. But as I said before, I think the main driver today, and if you look at headlines, Bloomberg and all that, they're all talking about First Republic and, regional banks again. So I think that's what's really moving the markets today, to the extent that they are moving. I could be wrong. That's just my.
No, that could be a fair point. And as mentioned, we did have that sources piece from Reuters, so that may come into play when the Yanks touch down. Kay, what are your general thoughts about markets today?
Well, I do think there's a little bit of yen involved, because if you look at not in particular when they issued the statement, but during the timing, during the Ueda meeting, all of a sudden European yield started to collapse as well, and I was thinking like, okay, this is the German data or something that come out, but they actually went earlier. Those yields started already to come up earlier. So yeah, there is a bit of a mix of stuff going on. It looks a bit like got this feeling where you go like we can't buy anything. There's little to buy. Okay, you can buy dollar yen because it's going up. I mean that's somewhere that. But then the most of the market was not looking at that side, and to switch around your brain is not always very easy. But then the euro crosses have been very strong until now, and they're actually more stabilizing right now. If you look at it, euro dollar was trading around 109.1520. Aussie just above the figure, and they came back down together as a result. Okay, euro Aussie is a tad higher again because the Aussie move is bigger in percentage, yada yada. But we're still not at highs in the euro Aussie that we saw the last few days. Euro Canada is a bit the same, so it's a bit of a case of scratching heads, in my opinion, in the market right now. And as you rightly say, it's end of month. There's going to be flows out of nowhere today, and even though, and I'm going to repeat, we've seen, and they come out on the on Twitter and stuff. So I'm not how shall I say, telling any secrets here, divulging any secrets here. But as I was saying in the room already, end of last week, I think, or on Monday this week, I haven't seen anything in the stock markets really or even the bond markets, which went up and down. But then if you look at the real variations, I don't see big dollar moves to be rebalancings to be done. But we may have a little bit going on the other side of the stuff because of European bourses or other equity markets. There may be a little bit more rebalancing to be done there, and I've read somewhere that perhaps there may be a little bit of euro to sell on the one hand, but then yen to sell as well. But the rebalancing would mean euro yen to remain bit. But that's all going to be done into the 4 p.m. And for the rest, as I say, it's a bit of a difficult market if you want to really read everything, because everything is living a little bit its own life. The one thing we must note today, two things actually. One, and I've been saying that for a while now, I still find the sterling to be a currency that's holding up pretty well through everything. Cable is holding up better. It's still above 124.5 or around there than what, for instance, euro dollar did. Cable is still in the middle of its range between that 123.70.80 and 125.25, where euro dollar lost over a big figure from the highs, right? And another one that's holding relatively well is the Kiwi in all of this. The Aussie is a bit weaker. I want to make a last point of what we had today, and that's the Norwegian kroner. So a few of us were trying to see if we've had some bottom forming in Brent or so, and then some change in the Norges Bank FX transactions for the month of May. But I think all of us, there's at least 3 or 4 of us who were in the position. We've stopped ourselves out today because they went from selling 1.5 billion Norwegian kroner per day to 1.4 billion Norwegian kroner per day. So that's nothing in a difference. especially that they keep actually pressing on the pedal quite, well, not as hard as they did a few months ago, but still relatively hard. So they are going to absorb a lot of possible Norwegian krona buying for tax reasons also. And that's caused a bit of a stir in the Norwegian kroner today. If we look at the high lows, Euro Noki went up over 1% at one stage, dollar Noki the same. So yeah, on the Norwegian side, we had to pull up the white flag and say like abandon the battle for now.
Yeah,
I'm going to talk about that. Actually, can I ask for a favor? Do you mind if I take the screen? Because I need to go in about 10-15 minutes. So I want to
of course, mate. Go
take
ahead.
the screen. Let me just write something to Blake before I forget.
Hey, still, and while you're
Yes.
putting up your screen, can you show the viewers what you just put into the chat room about the M3, or is it something? Yeah,
yes.
because it's maybe an interesting one there.
So this chart here, the whole of Twitter is panicking over this. It's like money supply or contracting, and then you look at the chart, and this is a year-on-year change, and the average of the past 5-6 decades is about 8 to 10%. So after this, absolutely huge spike, 20% year-on-year, you're going to have a correction. I mean, and it makes sense. And remember, the Fed is doing QT for the first time in history, almost. And so it's, this really shouldn't worry anybody. I mean, obviously, in the very, very short term, it has effects. But I mean, this picture here is so bullish, it hurts.
It's like pulling the plug on a bath and then being surprised that the water's leaking out.
Yeah, exactly. Anyway, just something to I put on the chat room, because I don't think people should be panicking over this. This is not the end of the world or anything.
Zero hedge start it.
Huh? Sorry?
Zero hedge start the panic.
Yeah, they usually do. They get clicks, don't they? I mean, credit to them. Some of the stories they get spot on, but so many more of them, they're just like clickbait. Anyway, so what do I think of yesterday's and today's move? Starting with the yields, as I always do, we're still in no man's land. We had a big move higher yesterday. We're reversing a big chunk of that today. We are still consolidating. The level for me, 328 or 360. 328 to 360 is the range. And as far as I'm concerned, nothing has changed in terms of yields. And for something to change in a big way, we either need to get the Fed in full panic mode, which means we go quite a bit lower, or we get the Fed's already telling us that they're not going to be cutting rates anytime soon, or we get the market kind of finally admitting that the Fed is not going to cut rates within the next, 6 to 12 months, because we are still pricing 75 by February. And February is only, April, 10 months away, less than 10 months away. So, it's a big hurdle to overcome. Anyway, yields are doing nothing. So in my opinion, yields are not driving anything. It's all driven now by the dollar and by the sentiment in the market. So today we have people talking about First Republic again. Apparently there's chatter about the government trying to put together a plan to save the bank. They need saving. So we're getting this move today, which is reversing a little bit of yesterday's gains. The S&P, interestingly, broke below those levels we were talking about, 4110. It was only a short-term support. Around, let me make a so basically this level here we broke below, and then the other level we had was roughly down here, right? So we broke back, we're above, and we're threatening to basically false break down both these levels. If we manage to stay above today, and I think there's good reason why we should stay above. Remember, it's month end, a lot of window dressing, a lot of shenanigans happening today on month end. So if we do stay above, this is going to be really bad for bears. I've said it before, I would be really scared if I was short. So, you have to be careful if you short. and risk is kind of reversing a little bit today, but you know, it's not breaking any levels. Let's just leave it at that. So the dollar is making a move. Not a very powerful one. I mean, in the grand scheme of things, we are so close to these lows. And I still think that there's a real danger we break below. You know, because look, we had a move from, you know, 106 down here, and now we're just going sideways. And this, the longer we stay here, you know, it's trying to carve a double bottom, but the longer we stay here, I think the more chance we have of a breakdown. So I would be very careful if I was long the dollar. Today is obviously a good day to be long the dollar, but overall, I still think there's danger ahead. Excuse me. Oh my God. The euro dollar, well, the inverse of the Dixie, similar thing, trying to carve a double top, still very close to these highs. You put a gun to my head, I would still buy it. I know I keep repeating myself, but for me, nothing has changed in the macro picture or in the technical picture yet. So, you know, as far as I'm concerned, these dips are dips to buy. Now, we talked about the kroner. I had taken a very small 1/3 position of both the euro Norway. Damn it. Something wrong with my throat. Sorry. Let me just mute for a second. Okay, that's better. Sorry about that. That was almost. I was suffocating there. Anyway, so I shorted a third of both the euro Norway and dollar Norway. The euro Norway had reached that 61.8. I had my stop in at -0.5%. It got hit. I'm out, and I guess I was expecting more from Norges Bank, which we didn't get. So, you know. That was a loser, and we moved to the next trade. And you know, that's one of the things every trader needs to be able to do, is to leave your ego at the door and just say I was wrong, and cut a trade while it's still not big, while the loss is still not big. The metals, well, the dollar's rallying, but yields are dropping, so it's kind of a mixed picture. Down a little bit today, consolidating, you know, from this move higher. I've talked about this before, this end of 2022 to these previous highs. We are retracing, but the retrace is very weak, very shallow at the moment. I really thought we would be retracing back down to this 1945, 1950 level, but at the moment we're just not even there yet. So it's interesting the way gold is trading. We are still only around 4% from the all-time highs. We have to remember that. It could do 4% in one day. So, you know, remember that. I think gold, silver, platinum still buy on dips in a big way. The question is, how do you time your entries? And I think, I mean, this is relatively clear for me. These previous highs here, it's also the 23.6. It's a logical assumption to say after this big move, we go back to the 23.6. So I would wait for that level to add or to initiate longs. Silver is a similar story. I've shown this chart many times, I know. I am already long, you know this, from 21.5 and just under 24, doing very nicely on that. I am waiting for a dip towards 23.80 to 24, which is this. I mean, depends on how you draw the channel, but this is roughly the area. And I would love to add the third that I sold above. I'd love to add that down there. So I'm still being patient, and with some trades, you really have to be patient and wait for the bloody market to come to your levels. I mean, it's really annoying. Platinum.
Hey, Stel.
Yes.
You have an ally, or we have an ally, I should say, because we're roughly well, we're in similar, not on the same levels, but in similar positions in silver. And Ray Dalio is with us, mate.
Oh.
I read his piece earlier this week. He's with us.
Well, all we need now.
And on silver.
All we need now is for Kramer to say, "Oh, silver's bearish," and that's it.
Yeah, exactly.
We're done. Platinum is something I'm gonna probably get involved very soon. About $10 below here. We are at this fib. I mean, this is an older fib, right? This is from the. Yeah, it's a 50% fib from this move high to the low. We went above, we come back. You know, it could be in play, but look, I mean, sometimes these technicals, look, it's to the pip twice. Anyway, I think I want to see another $10, and I'm going to start getting long just a little bit of platinum as well. Elsewhere, cryptos, again, this move has been powerful. And as far as I'm concerned, it's still looking pretty good. We need to take out these lows for this move to say, we need to take out 26,500. If we take that out, I think then it starts looking bearish. But for now, I still think Bitcoin is bullish, and the breakout point, 31K, is not that far. So if we do get risk on, which I think we could, I think today we'll probably close green in equities. I know I might sound crazy by saying it, but it's month end and all that. I think cryptos are going to get a little boost.
We're trading around the Salos level in the 29th.
Yeah, it's hard to know where these guys.
Well, apparently it's somewhere in the 29K.
Okay, fair enough. Anyway, that's what I wanted to show. Maybe have a look at oil as well. I haven't had a look at it in a while. I think we can get rid of this now. That's old news. Oops. I don't want to touch oil. I really don't. It's just a volatile piece of... yeah, I don't know what to do with it. Don't ask me. Sorry, I don't know what to do with this. I really don't. Yeah. That's pretty much it. Maybe the pound as well. I'm still bullish the pound for the remainder of the year. Cable has broken out of this channel. It's still clinging onto it, which is worrying if you're bullish. But we're still relatively close. We're about under 100 pips from the breakout point here, these highs. I mean, if we take those out, that's it. I think we are then going into the 30s. But and euro pound conversely is going to go back towards 83 again. But for now, it's trying to break out. And one more actually. Oops, euro yen. That's a nice one. Obviously, a very powerful move higher today. We've taken out these highs, but we are now pretty much at the 2014 highs. So this level, very, very important. If that breaks, I think that's one of the strongest technical kind of events you can have. Would be a very, very big breakout, given that it's also coupled by, there's a reason for this, right? It's not just market action. There's a reason. We had the BOJ market kind of expecting or maybe hoping for a hawkish meeting, and we didn't get it. So if we take out these highs, it's not going to look good. I guess you can take a nice risk reward short here. You know where you're wrong, and it's not percentage wise. It's very, very little towards. So what's those highs? 149.9, I think, or something like that. 149.8. But I'm not touching yen. Anyway, that's it from me. I'll pass it back to you.
Thank you very much, sir.
No problem.
Good stuff as always. Are you disappearing now, are you?
I'm going to go in 2 minutes and then I'll be back for a face.
Yeah, cool, mate. Thank you very much. Have a great weekend still. If you pop off while we're talking, let's just grab the screen back.
Thank you, guys.
Quickly. Cheers, mate. So dollar yen, dollar China. You can see my screen all okay?
Yeah.
Yeah, cool. So dollar China, this one, which I took on the break above, it's not really playing ball at the moment, looking a bit dodgy. I don't know, some people might think this is forming a bull flag or whatever. All I see is that we made a high, and we can't get near that high again, and we're just dribbling lower. We still haven't had a proper test of this 691 break area. So that is still yet to happen, but the PA at the moment seems like it wants to come lower rather than go higher. So on my position, I'm looking for another move towards 694 into 694, maybe take a bit of more of a chunk off the longs here just in case we get a move down and we get a break under. If I can get a chunk off up in the 694s, I'll perhaps look to reload on a test of this 691. See if the level holds, and then at least I know my stops. I can probably bring them up a bit from where they are now below. But for this one, could be that this was end of month part of the year move. Don't know if the end of month stuff is on its way out the door. may give us a clearer indication of what this one wants to do, particularly regarding this break here. Still mentioned euro sterling. I think again, as Kay mentioned about cable holding up relatively well, the pound in general holding up relatively well. This one again is showing that obviously euro dollar moving more than cable is at the moment, so the bigger driver. We're holding the 88 figure at the moment, just ahead of it, down to 87.90 is usually the rough ballpark number. When we get dips to down there. Up here, it's become a bit messy. We were messing with this 86.60 or 88.60. Then we made some new highs. Then it became a little bit loose. So we might be just seeing a bit of a wider zone to watch on the top side here. Again, I'm not seeing any fundamental reasons why this should go one way or another, particularly unless something like the Bank of England confirms that it's going to be hiking more than it has said it was previously. Again, just before I hand it over to Kate, I want to just make a point about today's moves, because just picking up a couple of the comments I've seen here and elsewhere, Abby are asking, do you expect a move in JPY to continue, pound yen to the moon? There's always a feeling that you've either missed a move and you want to get in on it and then you end up buying at the top, or you think a move is so big that you automatically want to fade it and then it keeps going. The only thing you can do in these situations is watch the price action. Okay, when we made this first high in the 80s, just in our chat room, I was saying I'm maybe going to have a little short up here if we don't break this high. So this move that happened here, if it doesn't break through this high, I was looking at a bit of a short. We nicked through it by a couple of pips in the first instance. So I said, no, not touching it. But then I had to go at the big figure for a big figure scalp. I chopped out of that because it went through pretty easily. So there's nothing at the moment to say that we're going to stop. But what you do is you look at each move. So we've got a high now. If we drop a bit, if we come back up and we test that high, can't get above it, pause just below it, that starts building you a picture. Okay, maybe there's something up here that's going to potentially lead to a top, and you let the price action do its thing. So if you want to try short in the top, look for the evidence to suggest you have got a top. And if we get up there a second time, don't break it. Doesn't mean get in with a 50 pip stop. You only need 10, 15, 20 pip stop if you're going to try that. Because if it makes a quick move through that high, we're likely going off again. Same on the downside. If you've missed this and wanted to be long, look for the levels where you might get a chance to get back in. That might be down at this 70, 80 area. If we get a test there and it holds, it might be down at this point here, 135.50. If we go down, test it holds. So look for the evidence before you start trying to be clever, fading moves or trying to jump on them again. Let the price action be your guide of getting in and getting out, and you don't have to risk a lot trying those. But I don't want to see people saying, yeah, I'm going to short up here because it's moved 250 pips. And then at the end of the PCE data, we're another 100 pips higher, and people are asking, well, what do I do now? So play it sensibly. Okay. Over to you, mate. Not a lot of time. But, I'm sure you've got a couple of key ones you want to...
Yeah, I'm going to try and keep it short, right?
Yeah.
I'm going to try to keep it short.
Yep, go ahead, mate. All yours.
Just talk about the yen pairs today. So had the break above this prior high 135, 10.15, bit of a double top here, broken through. This small channel or whatever is also broken through at 135, 55.60, which was not too far. This is more around 30 of those prior lows. So we are going to see if the US data this afternoon are a little bit weaker, perhaps, then it's going to be an interesting watch to see what it does if ever we come back down here in those low 135s due to perhaps lower yields also. If in turn we get a little bit better data, this afternoon, then I could see this test of 137 or even 138 being underway. Perhaps not today, but with the month end, I really don't know. But yeah, early next week, the market may be in an attempt to take it back up to the 138. On the yen crosses, as Stelios already showed, this prior high, it's a little bit off because it's tough to really pin the high, and I should change my trading view settings here to pin really the high, but the high is actually 78 or 80 or so. Look at this here, it's around this low as well, but if it would go, this is the global financial crisis and the European crisis combined, this move down. There's a big move down that we saw then in the euro yen, and the 78.6 is around 153.65. So if you look for the next level, if this would really break and confirmed, and since we are at the end of the week and it's a weekly, why not? If we confirm with a close above and you open again above come Monday, we might be on our way to 153. So that's a bit of a level to watch here. For it to reverse is a big word, but to fizzle out perhaps this move, we should start to get back below 148.30-ish, which was our 30.40 here, which was our prior high. That would be a first signal. And then here, yeah, that one I should probably take it out, but that is what I'm going to take it out. You know, it's been traversed so often. But then the next one here would be around only around 145.75. Actually, we can have the low of the prior days from where we started to go up again as well, around 146.40. But for the time being, we just can't. It's just going right. So for as long as it's not below 148.40 again, I wouldn't fight this. I would not. On the other rest, so the one that we spoke about, we had this big break, and we are now getting closer and closer to the. We are actually pretty much on it. So when we broke this wedge, we were trading around 89, 70, 80. And we are trading 89.60. So watch this level on the Aussie yen. We have broken through this one in the meantime, which was the short-term trend line. We have broken through it. So your support, if it goes back down, is going to be around 89, the figure here. The top side of the broken wedge is today is around 90.25, if that 89, call it 70, 80, would give way again. It could be one that is going to be a laggard against versus the rest. Euro, yen, sterling yen look a lot more powerful, right? And see what I said the other day. We had this level in the 165.5. That's really holding. So for the more medium term now, I know that we're 400 points higher, but 400 points in sterling yen is still only 2.5%, right? So this is going to be a big zone going forward. Make a note of that one on your post-its. And intermediate one, 166.60 again. But the first where we've broken above here now is going to be 168.5 to 168.70. That's going to be the first level to keep an eye on. If we start to break back below, then there may something wrong, perhaps with the sterling, or some reversal seen in the yen. But for the time being, the reversal in the yen, I don't know. And sterling in the meantime is still creeping up. That may still be month-end stuff as well in there. Perhaps for the sterling, we will have to keep a close eye on what's happening next week, because this week it's really holding pretty well. Where can we go? I think I said it before. So we are also actually moving above those prior highs here. Could be why not, that we are going to retest 2022, October 2022 highs around the 172 if this goes on. So yeah, that's one to closely monitor, I think, especially with both the yen being a little bit weak now and the sterling showing some decent resilience. Yeah, the other one we were looking at as well the other days, and I said Kiwi yen was a much more difficult one to trade, and it actually held relatively well around this bottom side of this channel. And now we've got this intermediate line here, which today has broken, and we are trading very close to the next resistance around 83.5. Since this is a bigger channel, I'm not going to start to counter this one, especially because of this. This Kiwi dollar, even though if we are in a down-sloping channel, contrary to the Aussie, we are holding those levels, those low 61s. I think by now, with a bit of dollar strength and the weakness in commodities that we saw the past sessions, we should have been trading already, or at least give it a try under 61. But the Kiwi is a bit stubborn, right? And we find it back as well in the Aussie Kiwi. And if you see what's happened over the past couple of sessions again, we had this retest of that level around 108, and we are trading well below towards 107.30. Low 107s should perhaps have a little bit of a say here. But that is to show the divergence that we have again between the Australian dollar and the New Zealand dollar. And in the Aussie, for instance, we've broken here, and we've never even come to test the 66.5 again, and we are already trading back under 66. And if the US numbers are not disastrous this afternoon, be careful what's happening around 65.60. If that goes, there could be a bit more to go. For a starter to around 65.25 perhaps, but then we're entering a big traffic zone if that would break. Be a bit careful what's happening to the Aussie this afternoon. Looking at the clock, I've done enough, right? Ionut, for the time being, I'm just watching the Noki, my friend. I'm not going to counter trade this. We're end of month. We'll see what happens next week to the oil, to the gas, to the Norwegian kroner, and then we can always either re-enter, either reassess. But for the time being, I'm not going to touch it.
Yeah, thank you very much, Kay. And just a message that there will be no flow show this Monday. It's bank holiday in the UK, and also the week after on the 8th of May. So no flow shows the 1st and 8th of May. Bran, I don't want you turning up on Monday saying there's no flow show. I've told you. And everyone else now knows. Ending the week with a bang and more to go. Thank you to all of you guys and girls for coming to the Flow Show. I hope we've steered you well in the run up to the Bank of Japan. We were doing it long enough. Thanks to Kay, and I'll thank Stelios. I'll get him some wax for his surfboard later for all their valued input. Have a great trading day. Have a great weekend. See you all on Tuesday.
Have a great weekend. Thanks, guys.
Cheers, Kay.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.